Hello and welcome back to the channel. I decided it was a good idea to do an analysis on silver and gold. I'm sure all of you are very much aware of how much these two precious metals, together with other precious metals, rallied in 2025 and 2026. All of them saw all-time highs, broke all the previous highs and saw all-time highs in 2026, early in the year, in January, to be specific. And yes, so let's get on with it because I'm sure everyone wants to know, would like to assess what are the next possibilities in terms of price. So the big question is, will they reach new highs again, or are they kind of over? That's a big question, right? That everyone would like to get answered. So I'm on silver. I'm going to start on silver. Silver reached in the last week of January $120, and gold went up to $5,600 per ounce. Okay, so let's go back to silver. I want to share the. Now I'm gonna use. Yeah, actually, Oanda is fine. This chart goes all the way back to the early 1800, right? Now, you can see here, well, let me get rid of these two marks, actually. Misleading for someone. So what happened in January? These are the last 3 months, right? So this is November, 3-4 months, right? So this is November, December, January, right? Now in January, what happened is, if I go on the weekly, there were 3 consecutive really strong weeks, right? Look, they were almost gapping up at the beginning of each new week, right? And that is a very big thing, right? Because just to give you an idea, just in January, the price of silver went up by 77%, just in the month of January. Now, does that appear as a normal movement? If someone called you and told you, oh, that the price of, I don't know, tomatoes if you if you're American, or potatoes, or any good climbs up 77% in a month, does that appear to be a normal situation or an abnormal situation? That's the question, right? Clearly, the answer is the latter, right? The situation is abnormal. So why is it abnormal? Because whatever the circumstances are in terms of market, to justify that kind of movement, you would need a shortage of supply that explains it, right? But also, shortage of supply isn't enough. You need a lot of buyers asking for it, right? And silver is not a commodity. Okay, yes, it has uses, industrial uses, especially with the new wave of production of the latest generation of solar panels, and there has been a slight increase in the mining cost, and you can pull out all sorts of explanations, but still you don't get an answer that is satisfactory, to be honest. And but the important thing is to know where you at, also in terms of what type of investment you are doing, right? Are you a long-term investor, and do you work in an investment bank and you're diversifying your portfolio? Are you buying silver just because you want to hold some and some gold for safety reasons in the family? Are you buying futures contract? Are you trading it on leverage? These things matter, right? But having said that, what if I told you that the price of silver is never going to come back to 120 in the next 15 years? Now, if you bought, and this is the point I want to make in this video, if you bought silver at 120, and I'm sure there's a lot of people who did that, right? And I'll explain it. I'll explain why I'm sure there's a lot of people who did that in a moment. If you bought at 120 and for the next 15 years, the price would stay here, or 10 years, let's say up to 2036, the price would never come back to 120. And would only come back to 120 in, let's say, 2040. You would have to wait until 2040 to get back the value of your investment, right? Now, is that a good thing? I don't think so, right? So why am I saying that? Because, and just to clarify, I realized that in the last 2 or 3 months, a lot of advertisement was appearing in all sorts of places, in social media and YouTube, all sorts of places where there's a free flow of content, so to speak, right? And the content is not really vetted by anyone, right? There's not an authority that says, oh, this content is good, this content sucks, this content is worthless, or anything like that. So the free flow is absolute, right? And I realized there were a lot of advertisements on buying silver and gold, and these advertisements intensified over the last month of December and January 2026, right? And I was looking at these and I was thinking, okay, that's a little strange. That's a little strange for most people, but it's actually typical of a strategy called pump and dump, right? Because don't forget, people, that there are operators in the market that move big quantities, right? I'm talking about in the billions of dollars, right? Even in one trade, right? So they can determine the price. They can determine a certain movement, right? So if I'm looking at the price of silver from economical standpoint, 120 doesn't hold, right? It's way off the cost support curve. It doesn't make any sense, basically. No matter what the reason you pull out to explain it, right? No matter what rabbit you pull out of the hat, it doesn't make any sense. Gold, we can argue a little more, but it hasn't moved that far in terms of, it hasn't moved proportionally that far, right? If you compare it to silver. So we'll go back to gold first in a moment. But so I went and I was looking at YouTube and I was noticing all these advertisements, right? So this guy has around 1 million subscribers, and he's certain that silver is nowhere near finished. Okay. Good for him that he can be so sure. I wish I could be that sure.
OG John AG here. Silver has
doesn't
crashed
have many
22.
subscribers, but this is interesting because it's one of the new channels, and it's totally, I mean, it's entirely AI, unless this is a real person and it's very much modified, but I think even the video is AI. But it doesn't really matter, because with 60,000 subscribers, you don't really reach that many people.
Yeah,
but this is where it becomes interesting. Now, all of a sudden, you have Tucker Carlson, who has over 5 million subscribers, and he invites Peter Schiff to talk about silver and gold, right? And okay, yes, gold could have been dominating this S&P. Dominating, I mean, that can be argued to a certain extent. So I went on and because I knew the crash was going to come, and I'll explain why in a second. there were a lot of things suggesting that the crash was coming right very soon. So I decided that, in my opinion, Tucker Carlson, proactively advertising a brokerage firm that sells metals called Battalion Metals is kind of a conflict of interest. I mean, I don't want to call it a conflict of interest, but like, what is your job? Are you in the news business, or are you a commentator and you're doing an episode on gold and silver because they're rallying too much? But this is different, right? This here you're suggesting, you're not suggesting that people buy, but you're inviting a well-known person that does that suggests to buy, and also you're adding you're actually telling the people where to go to buy it. So it's kind of I mean, I don't want to comment more than I have already done because it's not nice, but I think you have to be careful when you do these things, right? So I did comment. I actually had to warn people. So this is my comment. You can see it here, right? Profxedge. And I explained people. You can read it in your own time, but you can take a snapshot of this and you can read it. But I was explaining people, when you see a massive appearance of news suggesting to buy an asset, you're stepping into the final phase of the so-called pump and dump strategy. The big players get into as many people as they can to fill their orders, initially slowly, and then in a few days, the asset goes down 30% and collapses in a few months. And I pulled down an example of when this thing happened the last time that it happened, right? And then I went all and talked about some fundamentals and a reasonable fundamental and economical explanation of why silver shouldn't be there. But let's not go in the explanation. Let's pretend we don't know what the explanation is, and we cannot justify and whatever that is, right? But if you look at the past, right, this chart, you can almost have it for free if you look for it, right? So if I look at the last time, let's say 2011, right? 2011, what happened in 2011? Just look at the chart, right? What's happening in 2011? Well, you get a rally, right? That starts, in July, August, September 2010, and goes all the way through the February 2011. And then what happens in 1 month? In actually, sorry, 1 week. Well, I'll show you what happens. You just look at the price. What happened to the price in the week that went from April 18 to April 25 or whatever? Well, the price dropped by 35%. Okay, that's not good. And what happened in the following years? Well, the price went all the way down to dropped 73%. So if you bought it at the all-time high in 2011, April, at $50, $49, all of a sudden the price never went back to that. You would realize in the coming months and years that the price wasn't going back to that level ever. I mean, it was going really far away from that level. In fact, it dropped 73%. Now, how much time did you have to wait to get back? Let's say you bought $100,000 of silver in 2011. How much time did you have to wait to get back to the level of your investment? Well, you would have had to wait up until 2025. I'm not sure which month, but we can look. Let's check. Yeah. So October 2025 from April 2011. So that would be 14 years and a half, right? 14 years and a half to get back to the value you initially invested. Is that a good investment? Well, it depends what you're doing, right? Clearly, on leverage, you would have collapsed. So this is not even to talk about. This is even ridiculous to consider. But let's say you're a long-term investment. Is this a good investment? Well, not really, because if you're like old school and long-term investment, you know that you need to use the old grandparents' rule, which is buy low and sell high. So you're not buying at the all-time high of the moment you're buying is not a good idea, right? So how do you know that you're at the all-time high? Well, there are things that tell you, right? Things that tell you that you're in a dangerous zone, right? So let's say, for instance, I'm calculating I'm implying the value of inflation, right? I'm applying the value of inflation. Well, that would hold, right? Because I've heard people say, well, it went to 20, it went to 50 in 2011, and inflation has gone up over 3-4 times. So it makes sense that it goes to 200. Yeah, from a theoretical point of view, it does. But what if it doesn't go to 200 and you're stuck? What if it before it goes to 200, it takes the same amount of years that it took when you bought from when you bought at the all-time high in 2011, which was the last big rally, to you had to wait the same amount of years. Well, so this would mean you, again, as I said earlier, you would only get back to 120 in 2045. Now, there's a thing to be said, another thing to be said. This is not the first thing that it happened. This is not the first and the second time that it happened, because if you go back to 1979 when there was an oil crisis, I don't know if any of you listeners would have been around at that time, but the same thing happened in 1979. But look what happened to the price. It reached an all-time high of the moment, and then what happened? Well, then it fell again. In a few weeks, it fell 80%. And how long would you have had to wait to get back your investment? Well, you could have sold it in break even in 2011, but really to get back a higher price, so be in profit on that investment, you would have had to wait to 2025. So is waiting another 20 years for the price of silver to go back to 120 unrealistic? I don't think so. I don't think it can be realistic. Now, of course, the crisis amplified the sensation of the shortage of demand. They can also amplify to a certain extent the shortage of demand, and there's a lot of variables and fundamentals going on here, but we cannot get into this. But what I'm trying to say is that ideally, whatever the investment and whatever the form, you want to buy when no one's buying. If it's a commodity of this kind, right? You want to buy when things are quiet, or you can follow the price action. You can see that there's trend lines going on here, right? There's a trend line here. Pardon the design, it was misaligned, and I'm not going for precision here today, right? There was a break, but then after the correction, the break didn't hold, didn't continue. So this break was useless. But then there was another low, and there was another break here. And this break held, right? So you have two good points, one here, one here, one here. You have three good points that are much better points to buy and hold silver. But, when it comes to the 27 or the 618 or double the value, well, this is where you're thinking of selling, right? You're not holding anymore. Double value of the last all-time high, right? But here you made a fortune, because if you let's say hypothetically you had a stop, right? Let's make a a simulation here, right? 1 second. So let's say you bought here and you had a stop here conservatively, and you sold. Hang on, let me feed this for a second. Right, and you sold at the 618. You liquidated the investment at the 618. So we're going conservative here, right? Very conservative. You would have made 7 times your initial investment. So this is why I went on all these
Hello, everybody, and welcome into
all these videos, and I commented because I wanted to warn people, and clearly I got flabbergasted. People said I was a fool, and someone, well, at least I saved someone. This person said every podcast I see now has an ad for gold, which was true, right? They all were putting it because they clearly were making money out of it, right? But the timing was, I think, really bad because these advertisements intensified right at the moment, and you know how many people got caught up in the investment. And now the big question is it going to come back to 120 right now? Well, now let's go a little bit more in depth in the analysis, because now up until now we've just talked. So what do we have here now? Well, we don't have much that we can operate with, right? But let's say we have a 1, 2, 3 down. You can see it. Let me put it on some smaller time frame. Let's do 4 hour. Okay, what do you have here? You have a 1, 2, 3 down. The first move went and retested the opening of the previous month. So December, right? That's what happened. Then you have a small correction and a retest of the low. So we went below the low of the previous month. That's very significant. And then you have a 1 and a 2 information. So what does this tell you actually? Well, not much really, because just a second, guys. Okay, sorry guys. So as I was saying, you have a 1, 2, 3 down with divergence, which is confirmed by this move. Now you could get a 1, 2, 3 up, but this is not certain. Why? I'll tell you why in a second. So what's happening here? On the 2 hour, let's check the 2 hour. Sorry, daily, 12 hour, 8 hour. I need to see all the time frame. No, so 4 hour. Yeah, okay, so yes. So I would say that you should get an up move here, right? At some point, you should get another up move. So most likely, this is going to come up for a deeper pullback and one more up. But from here, it's anyone's guess, right? No one has a 100% certainty that that silver is gonna even come to 120 in our lifetime. Basically, that could not be the case, right? So don't bet on it, right? If you have bought, when silver's price was like 15, 14, 20, 25, even 30, 40, I would consider liquidating the positions actually. if I were the person taking the decision, right? So when is this becoming scary? When it comes here, and if you get a sell setup, well, that means we could be starting a downtrend, and all of a sudden the downtrend can change steepness also, right? And become stronger. So there is no certainty, and no one has this type of certainty that silver is going to come back up. What about gold? Well, the concept is the same, right? There's a difference here. Gold did not come and retest the previous month's low, which is a good sign. But you do have a 1, 2, 3 with divergence already. Now, I don't think this is the final say on gold. I think we need to be careful, and we will look at internal divergence on the up move, because we have a trend here, because we broke that high, even if it's a correction. The second one is higher, right? And we do have this divergence, but if this holds, if this holds here, even if it broke the trend line, that's irrelevant, right? If this doesn't come and break this level, but we do have higher lows and lower lows, then we will have another up move. So for the moment, I'm looking at this for a buy, right? But when it comes here, I'm not looking for buys anymore, and I would be careful. If I wouldn't hold gold either, because I showed you, going back to silver, and this is actually very, very significant. I just showed you the last 40 years, right? I went to the 70s, right? So I went from 2011. Let's go 2 weeks, right? From 2011 to today, the same thing happened. But if you go back to the back in time, even before the 70, 79, 80, the same thing happened. But even if you go back in time and you stretch these, right? Even here, stretch this. 74 was also a crisis, and the same thing happened, right? So this, but in a smaller scale. But there were you would have to wait 5 years to get back your initial investment if you bought at the all-time high of then. And if you go back in time, you'll find more, right? Because look at this, for instance. This is from 68, right, to 72. That's only 4 years. So what this tell? But if you had a good chart and you could analyze the past with more detail, you would see that there's many different crises, even in the centuries before, right? That brought the price, floated the price to an extreme high level, and then it reassessed it back to normal levels. So where can silver go from here? Worst case scenario in terms of who's holding it, right? For who's holding it? Well, there's some key levels that you can look at. One is this, which, as absurd as that might appear, this could be a level where it goes back to the 20. This is another level, so 35, 38. Or this can be a level, so 50. This can be a base level, actually, because to a certain extent, because it's a level that was significant in the last 50 years, because it touched it twice, right? This level. Sorry, my drawing skills are quite poor. Forgive me. So 50, 35, 38, and 20. These are the levels where it can go, over the next months, few years. And I wouldn't be surprised if it did so. So again, be careful if you're in the buy and you're holding, and this is not a good place to accumulate. No, not at all. Let it do a correction of some kind, and then you can buy again. But it's not now, right? Not now. So very long video, over 30 minutes. I hope I was helpful to at least someone. Yes, also gold. Gold seems to be holding much better, but again, you still have you have different levels here, but the concept is the same. Now you have the 2000 level. I would say the 3300 level. Yes, I can see this coming back here. Absolutely. It doesn't have to go to over 5,600 or to 10,000. Those are just assumptions. Actually, that's just speculation. Yes. So I'll leave you with that. Very long video, but I hope it can be of help to someone. So you're welcome to subscribe if you like what you hear and if you find it useful. Thanks for being here. Have a good day.